Hey everyone, this is Ryan Mallory for SharePointer.com. Today is April 10th, 2015, and the final hour of trading on the day and for the week, and a little bit more stable of a trading environment that we found from trading the market. So that's a welcome development, quite honestly, because if you look at the market over the last 4 months, my gosh, it's just been a lot of give and take. It's like one step forward, one step back. I mean, you can't even get 2 steps forward before that first step comes backwards on you. But yeah, I mean, it's not a lot to write home about at this time. But we got above 2087 yesterday, and that was a big deal. You look at here. Yesterday we needed to get above 2087. We did that. We closed above it in the final hour. We got a convergence of moving averages right below yesterday's price action. And why that's interesting is that it really defines what kind of market that we're in right now. When you have the 50, the 20, the 10, and the 5 all converged on top of each other, where they're all within like a point of one another, it shows you just how tight the trading range has been so far this year, in that no matter what time frame you're looking at, the price is simply not moving. And but we're getting some of that final. We're up 3 days in a row here. We got an hour to go, so who knows, maybe Greece will default, or Russia will invade entire Western Europe or something before the bell rings and crash the market. But as it stands right now, the S&P 500 is looking to have a pretty solid week here. So I drew a little bit of a resistance level right here that I thought was a bit interesting. It ignores the wicks, or the candle shadows from the March highs. But if you just draw it right across, we're sitting right there, kind of at resistance in the market. I don't know if that's going to really be a heavy resistance level for the market. I think that it'll probably will break through it, but time will tell. I mean, right now we're maybe like a fraction of a point above it. But yeah, overall, the S&P 500 looks a whole lot better now. So what we had in the past, though, is you had this big move to new all-time highs, then we had a pullback, and then you had another move, but it didn't make new highs. It just made a lower high. And then you had a pullback again, but it didn't make new lows. It just made a higher low. So then you get the point here. We have another move that creates a lower high, another move, but it creates a sort of right at or just above the previous low. So we'll just call that a higher low. So instead of making higher highs and higher lows, or lower lows and lower highs, we're making higher lows and lower and higher low. Geez, this is started. It's like a tongue twister here. We're making lower highs and higher lows. And what that does is that means like price is getting smashed together here, and we're not getting any direction. And instead of that happening like over a week or two, it's been happening over months. Okay, so being able to grab a hold of a trend and being able to swing it has been extremely difficult to do. But with the market right now, it's starting to move. We broke above this little mini higher or lower high here that was formed a couple of weeks ago. Now we're busting above it. Ideally, the quicker we can get above those March highs, the better, and then it'll be off to all-time highs. So there's really 2 points that the bulls need to get above. First of all, it's these March highs, which will definitely create a resounding higher high when you can look at it from a longer time frame, and then to bust out to new all-time highs. Those are really the 2 things that it needs to do. And if you look at the weekly chart here, yeah, it has all these lines on there, so it makes it a little bit messy. But you can just see, though, that how just choppy it has been, especially over the last 4 weeks or so. It has just been up, down, up, down, up, and down. So let's see if this thing can continue into the next week. I mean, overall, it's any kind of a big move has been sold off the following week. So yeah, that does weigh on you going into next week. You just don't know what the following week, what kind of sentiment there's going to be. The other thing that I think is pretty interesting in this market, and I'm by no means a VIX expert or anything else, but I understand it in general terms, and I do follow it each and every day. You look at the VIX going all the way back to July of last year, and there's been this like steady rising level of support that when it's been touched, it's reversed pretty hard. Right now, we're actually below it, which is kind of interesting here. The other thing, too, is if you look at the S&P 500 on a monthly chart. Just ignore so far what we've seen so far this month. But 3 out of the last 4 months for the S&P 500, not counting this month, has been down. If you want to count this month, it's 3 out of the last 5. So you think that there'd be more of a uptick in the VIX, right? But not so much. The VIX is down in the 12s. It's really a phenomenon worth pondering a little bit more in the coming days and weeks. But so you're starting to see volatility break down some to where there's not as much worry about things like Russia and falling oil prices, etc. Let's look at some of the commodities here. GLD. I don't think there's any trade here, quite honestly. And it's been gapping all over the place of late, but I just don't really see any kind of edge in it. SLV's really the same thing. The SLV kind of looks more bearish than anything, but don't see any kind of trading edge there either. In fact, you could say in SLV, it's creating this like mammoth-sized head and shoulders pattern dating back to November, where you have a left shoulder, head, and right shoulder. So if it breaks both, so that'll be confirmed. USO does look a little bit bullish to me. I mean, and a lot of the oil stocks in general have been looking bullish as well. I mean, it doesn't really matter which ones you look at, but you got CXO here that has this massive inverse head and shoulders pattern, and it's pretty much on the verge of breaking out. Not so much today, but going into next week, a very strong candidate for a high flying stock. And I kind of like this trade setup too, because I think that you can get into it, like around 121.70 or so, and put a stop loss below, I don't know, below this little price action here, to where if it breaks down below, let's say, I'm not sure if we want to do Wednesday's high lows or Monday's lows. I'd say Wednesday's lows. So if it breaks back below 119, you probably want to get out of it. So you have like a 1 or 2% risk on the trade, with upside of up to 130 easily, if the trade plays out well. So really good trade setups. I'm just a little bit nervous about the oil stocks still, because I have traded them some late last year and early this year, and some success, not much in other cases, but there's just not a lot of day-to-day consistency in the oil market. Now, one thing I will say is that I've noticed that when the oil is doing its large upswings and downswings, the oil stocks aren't matching those same kind of wild swings. Now, if you get into a stock like CHK, yeah, there's a little bit bigger swings and so forth in it, just because it's a smaller cap stock and a lot more volume that's being poured into it of late. So, but let's look at some other trades here. I'm going to go through the portfolio first. I'm still long on UPRO. It's been great so far. We got back in it on April 1st. We got in at 132.12. It's at 140.31. So there's about $8 worth of profit, or 6.2%. So far, it's been behaving really good. And this follows the technical analysis of my S&P 500. So as it goes, so will UPRO, just 3 times that amount. But been holding this thing for about 10 days now. You'd think that after 10 days, if you were able to hold on to it that long without getting stopped out, you'd probably be up like 15-20%. But not. It's just been a slow and steady riser. I couldn't even imagine what SPY must be like trying to buy and sell that, because UPRO isn't moving a ton right now, and if it's not moving a ton, SPY isn't either. AAPL, this one's taking a lot of patience. Finally today we're in the green on it. 126.81 we got in at, and it's finally starting to move back out of this bull flag. And if you look at this thing in previous bull flags, this thing runs out of bull flags. It has a history. And I'm just talking about going all the way back to, May, June of last year. So for about the past year, you can see here, consolidates nicely, breaks out, consolidates nicely, breaks out. This one's a little bit more choppier. It's kind of like what we've been seeing right now, but nonetheless, it breaks out moving average like what we've been seeing of late too. Here was a much more extended consolidation, but when it finally did break out, it broke out with authority in a very, very big way. Now, the only down thing is I'm not going to hold Apple through earnings. if I had to choose a stock to hold through earnings, it probably would be Apple. But you know, just in general, I have a principle: when I'm swing trading, I'm not going to be holding stocks through earnings. There's just too much unpredictability about it. One bad call on our earnings can really wreak havoc on a portfolio that you're swing trading. So yeah, I'm not going to do that. So we got earnings coming up later this month, and we'll be out of it by then. So hopefully it makes its move before earnings here. And it's been getting just slammed with these downgrades lately, and obviously, you know, the reason why these companies like Raymond James are doing that is because they're trying to push that stock price down so they can get into it. So when they hold it through earnings, and if the stock does well, they can go bragging to their people that, hey, we got in at this price. And we, you know, it's just total corruption, quite honestly. I'm not specifically calling out Raymond James, but I'm just calling out, you know, the banking industry in general with their downgrades and upgrades. They like to do that stuff. They'll buy that stock as soon as they downgrade it, trying to get back in at a cheaper price. So you got Apple, nice little move there. The sooner that it can get back above 130, the better. In the much shorter term, if it can get above Tuesday's highs, that would be fabulous, just absolutely fabulous. ETN. Eden Corporation. This was another one. It's taken some patience. I mean, we've sort of run it down a little bit and never got stopped out, and now it's trying to bounce back up. If it can get back above that 50-day moving average, awesome. But overall, I mean, it's trying to come out of that base some. It did originally when this big up bar on Monday. It's just that since then it's been giving back some of those gains, except for the last 2 days where it's rallying back some. FB. This is probably the most irritating position in the, because this stock's been down 8 of the last 9 days. We got in on it on April 7th when this thing was breaking out here, and it was not looking like that at that time. But I mean, it was looking really promising. Twitter was breaking out. LNKD was even showing some strength on the charts. So this looked like a common sense play, and then it gives back those gains, but it didn't violate the trade necessarily. But over the last 4 days, it's finished lower each day, but it's not been in a significant way. It's been on low volume, as you can see here. So trying to wait this thing out. I've been going back, honestly, all day today, whether or not I should hold it, you know, through the weekend or not. We'll see. I'm a little bit mixed on this one. And then finally, a new addition today, BEAV, BE Aerospace, or like what we call it, the BEAV in the splash zone. Nice little double bottom here, bull flag out of that double bottom. Not your textbook bull flag, quite honestly, but bull flag nonetheless. It's coming out of it today. Like to see this thing get back over 63. I'm long in it from 63.36. So that's the portfolio there. It's UPRO is really the crown jewel in the portfolio at this moment. You know, you got FB and ETNs, you know, kind of dragging their feet, and BEAV just really too new to form an opinion on quite yet. Some other stocks that I'm watching, and I don't expect to do anything before the end of the day today. BSX consolidation there. It looked like it was going to back those gains. OLED, similar time to trade, but it's not giving up those gains. It's at 47.72. Looks really good going into next week. Definitely a play to keep an eye on. DG, Dollar General, and DLTR. These are both stocks that are looking pretty solid. Between the two, DG probably has the better chart. You know, it's coming out of that consolidation real nicely there. Possibility for next week. Good defensive stock too, because a lot of times these dollar discount stocks, they tend to do pretty good in a bad market. So a lot of people run to them because, you know, the fundamental theory is in a bit of bad market, people are going to shop at dollar stores more, or a bad economy, not necessarily a bad market. LB. We got in and out of this one for a loss earlier. I guess it was last month that we were in it. We got stopped out with this nasty candle here. It's bounced back. I wouldn't even say it's really bounced back. It's just sort of lingered right there at the highs. I can see where this could potentially be a long setup, but the problem with this LB stock, it is just so whimsical on an intraday basis. You think it's breaking out, you get into it, and boom, it hits a wall of selling. It seems to happen almost every day here the last couple of weeks. PEIX, this is a specialty chemical, ethanol. Nice inverse head and shoulders here. Not quite, you can see what I'm talking about here with the left shoulder head, then you got a little bit of right shoulder. So it's breaking out. I mean, if it gets above 1171 or so, which it is, it provides an intriguing trade. So actually, let's not say 1171. Let's say about 1175, which still is above it, but it's better to be exact about the breakout area. Problem with this one's going to be the stop loss. You probably got to put it below yesterday's lows just to be able to manage losses as tight as possible. The problem with putting it at that point, though, is it puts you in a situation to get easily stopped out without necessarily violating the premise of the trade. RRD, I've had my eye on this one all day as well. It broke out nicely. The reason why I didn't get into it, why I got into BEAV instead of this one at 1950 when I was watching it earlier today, was because it had all this resistance right here that it needed to get above. Now it is, you know, like around 1970, it's above it. So it's looking much better at this juncture. However, I'd like to just see what it does on Monday. If we, you know, I don't want to add necessary exposure to the portfolio. And at this point, I feel like I'm chasing. The volume's not overly impressive in the stock either. TEX coming out of this was definitely a trade possibility for Monday, one that I want to keep a close eye on. Inverse head and shoulders again, breaking out of the downtrend, and then you got TXT forming a nice bull flag here. Hasn't quite broken out yet, but one to keep on the radar for Monday. So that's going to do it for today. If you guys have any questions, feel free to email me, ryan@shareplanner.com. I'll take any and all questions that you might have. And if you haven't done so yet, try out the Share Planner Splash Zone. It's a free 7-day trial. In the Splash Zone, you get access to my chat room that I am in every day from 9:30 to 4, and sometimes a little earlier and sometimes a little bit later. And you'll get all my swing trade alerts via text, email, and also posted in the chat room, as well as stocks that I'm watching and my thoughts and commentary on the market and answers to your questions. So you guys have a great weekend and enjoy some time off from this market, and hopefully we can see this market finish strong on the day. Take care and God bless.